Hello everybody and welcome to another BONK technical analysis video. The last video I posted was really popular and I got a lot of great feedback. So what I wanted to do was create another one and show you my exact trading plan and the levels to the upside and to the downside I'm looking at. If you didn't watch the previous video, please go back and watch that. It is still valid and there are levels that I went over in that video that I'm not going to cover in this one. So please go back, check that one out, and also watch this as well. I'll go ahead and get started with a very quick recap of one of the trades I called out in the previous video. I mentioned that in this area, this value area high here was acting as support, and that price was going to move up to this area that is the low volume node, which is a resistance, and potentially take out these highs, but I said very specifically that this is still resistance and I will be looking for shorts here. So the trades looked a little bit like this, along from here, exit in this area of resistance, and then a short after this candle close below this zone of resistance. And you could bring this trade down to around here, back around where the trade was entered. And if you didn't take profits or you didn't exit properly, you probably got stopped out by this wick down here. So always remember to take profits and exit your trades because price is very likely to come back and stop you out. I'll go ahead and remove these tools. This is not to clutter the chart and get on to the next levels to the upside and the downside. First, what I'm seeing here is we are putting in a series of consecutive lower highs. Additionally, we're putting in a series of consecutive higher lows. What this is contracting price action. What it does is it generates liquidity to the upside and to the downside, and it generates it in such a way that the exit from the apex of this contracting price action is generally highly volatile and highly unpredictable because there are stop losses above these highs and stop losses below these lows, and they're not all placed in the same exact areas. There's actually a cascade of stop losses, which creates an opportunity for a short squeeze or a long squeeze. So what happens is a lot of times there's a whipsaw to the downside to take out all the longs, and then a move to the upside to take out all the shorts, and then sometimes it just continues ranging sideways. Or it'll go move up first, take out the shorts, and then down, take out the longs. I mentioned this in the previous video, it doesn't matter which one happens first, as long as you're ready for the trade on both sides. Generally, the way I trade is I do not like to enter at the apex of these contracting price action shapes. I know a lot of new traders do, but that's a good way to get wrecked. What I like to do is I like to prepare for a trade around this area where longs are going to be taken out, and then to the upside, I prepare for shorts. Now, there are scalps to be had in this area, don't get me wrong, and I will take scalps here. But if I'm going to take a trade around here, I'm going to enter the trade in the apex, and I'll likely be out of the trade before price even has time to exit. So I'll go ahead and look for areas to the upside. First of all, I see a high volume node in this area, and I also see a high volume node in this area. So these are going to be areas that I know price is going to be attracted to. If you haven't watched the liquidity trading module of my market mechanics masterclass, it goes over all of this liquidity related material. So please go check that out. You can find the link in my Discord. Anyway, moving on, I want to find confluence in this area. So I'll start off with Fibonacci levels. I'll take a trend-based fib extension, and I know just from experience that this is a key low, this is a key high, and this is another key low. So what I'm going to do is take a trend-based fib extension anchored to these lows and highs. Right here you can see there's a one-to-one trend-based fib extension in confluence with the high volume node. I can also take a fib retracement. This is actually going to be an expansion. So I'll take it from this high to this low here, and you can see there's a 1.618 expansion in perfect confluence with the one-to-one extension in perfect confluence with the high volume node. Additionally, and I'll go to the weekly chart, there is a high time frame level. You can see right here, there is a weekly level. That's simply where this week closes and this week opens, and it's where this level has not been revisited by price yet. So we have a naked weekly level, we have the 1618, we have the 1-to-1, and we have the high volume node. I'll go ahead and I'll remove this box as not to clutter the charts. You can see that this area provided an area of support and resistance. Right here, price came down, rejected as support, did it again here, again here, again here, reacted here and here and here as well. So I know there's a lot of activity in this level, a lot of trading interest. It's also where that weekly level is and all that confluence is. So again, just to reinforce the importance of this level. This is a key resistance level, and I will be looking to take shorts from here. Now again, I'm not going to set a limit order for a short. I need to see the reaction when price hits that level, and if price hits that level. Of course, it's always possible that price just continues moving downward, but I want to be prepared for if price does come up. Now, I'm not going to get too much into this level because we've already moved up. We've hit this area of resistance, and if we move up again, sure, maybe we can reject again. But I went over this level a bit in the last video, and it was mostly about this low volume node actually, but what I would like to see is price to move up and consolidate in this area. It is a high volume node, so it's more likely that price will consolidate in this area before moving to a new area. So that's what I'm looking for there. If we get any type of swing failure pattern of this high here or a failed auction, that would be time for a short entry, but I need more information to determine a trade off of that level. So I'll go ahead and remove this box right here. So right now, this is the level to the upside I'm looking at. This high volume node here is potentially a level I'll be looking at for a short. But right now I need more information. Now let's look at the downside. Now, this downside isn't as easy as taking simple Fibonacci levels or high time frame levels. But what I see is that this was your chance to enter a long for higher time frame targets. Anything after that area right here are late longs. If you took a long here, sure, be aware of the time frame you're trading. This was a great entry if your target was right here. But for high time frame targets, these are late longs. So what I want to do is I want to take these longs out. Already, we've taken these longs out, or a lot of them. But what I want to draw your attention to is a small area that most people will not even consider or look at. That's the area right here. Price first moved up and found its first bit of resistance here. As you can see, the price moved up and then back down. But longs were sitting in this area and ensuring that price did not fall below this area. Whoever entered here was defending their positions. Additionally, longs came in, late longs into this impulse upward, and entered here, so their stop losses are likely at entry or slightly below. I'll go ahead and I'll remove this line so not to get cluttered. So what I want to do is take out these late longs. I want to take their stop losses and then move upwards. Now, this might not happen. I want to see, move down here, take these, and then move up. I'm willing to miss this trade. I'm willing to miss the move up because I didn't become a professional trader by taking these lower probability trades from, for example, here. I became a professional trader by missing trades like this because these are the higher probability trades. I want to see these longs taken out. I want to see this liquidity taken before I move up. I do not want to enter here, and the reason is if I entered here, I have nowhere to put my stop loss. If I put it down here, that's actually where I want to take out the other stop losses. If I put it here, that's where I want to take out the other stop losses. If I put it here, this is where I want to take out the other stop losses. Anywhere I would be able to put my stop loss is exactly where I want everyone else's stop loss so I can take them. So for me, there's no trade, at least on the higher time frame, there's no trade to be had in this area. And the same goes for any shorts. I wouldn't want to put my short stop loss here because I want to take everyone else's that are put there. Same for here, same for here. And this is just the nature of the contracting price action. It generates liquidity to the upside and the downside, like I mentioned earlier. So when you're entering the apex, there really is no good trade to be had unless it's a scalp trade. Like I said, I don't want to put my stop loss where liquidity is at. So right now, this is the next level to the downside I'm willing to take a higher time frame trade off of. Now, again, like I said, I'm not just going to set a limit order here. I want to see very specific reaction at this level. If price moves straight through, I'm not going to take a long. But if price makes a swing failure pattern and does something like this, sure, I would like to take a long there. Additionally, if it makes a failed auction, something like this, I could take a long from there. But it really depends on the reaction at the time the level is hit, just like the level to the upside I'm looking at. So here are the two levels I'm looking at on the higher time frame. What I want to do is get on the lower time frame and look at how the apex of contraction price action like this can be traded. Immediately I see that there is a series of higher lows here. There's a series of lower highs here. If I'm going to trade this, I would like to see a swing failure pattern of this line here. So it would look something like a move here and a quick reaction, leaving a wick behind and a candle close above this line. That would be my trigger for a long trade. Now, this is not a long trade to that upper level I was talking about. This would be a long trade probably to around here. And the stop loss would be somewhere below the wick. The reason I would take the long to here is very simply because I see a bit of a support resistance flip here. This would be a quick scalp trade, in and out, done. Additionally, I would look for swing failure patterns of areas like this and areas like this. And you can see that just below that is the higher time frame entry I would like. And I would trade this the same for the upside. If I get a swing failure pattern above this level, I would like to take that as a short and I would exit very quickly. I want to be in and out because I don't want to trade the apex of contracting price action. I would say it's a 50-50 chance to get your idea right and a very high likelihood that even if you are right, you're going to get stopped out. That's all I have for this BONK analysis video. If you liked it, please like the video, subscribe, write a comment if you have any questions. If you want to see any other coins, any other technical analysis, please let me know. I won't know otherwise. If you have any questions or want to learn or find exclusive analysis, I've done some exclusive analysis on Dogecoin and a lot of other coins. Check out my Discord. It is free. Hop in there, chat with me. Enjoy the community. That's all I have for this video. Thank you for watching.